I'm Fabian Stoll and welcome to my video about DFI and why I think it will fail. What is DFI? What is the DFI chain? DeFi is the currency of the DeFi chain. Bitcoin is like money, something like gold. And Ethereum is a whole platform. On Ethereum you can do more or less everything trustless. And the DeFi chain is like Ethereum, but limited for DeFi projects. Yeah, what is DeFi? DeFi stands for decentralized finance. And with this finance, it's meant that you can do everything like on a bank or on a broker, like lending, borrowing, so traditional banking activities, exchanging, investing, speculation. That's more on the broker side. And that could be all possible on the blockchain, decentralized and therefore trustless. Yeah, let's come to the history of the DeFi chain. The founders are Julian Hosp and Yusin Hua. And I know Julian Hosp a little bit because of his 10x ICO. And his path is not so great. With Lioness, he had a big part in the MLM scheme where he was on a high level. And for 10x, he made the ICO and he sold this crypto credit card. The idea was something like crypto.com, but unfortunately there was never really a product. And all the money they could collect from investors went to nowhere. Julian Hosp got fired, and perhaps that was a lucky move for him, because now he's not really responsible for all the stuff happened afterwards. But it's still a bit shady, yeah. And the first products on the DeFi chain were staking, liquidity mining, and lending. Then they added the synthetic assets, dUSD, dApple, dSpider, dGold, and many more. And we come later to this. And now they also allowed uncollateralized minting, or how I would call it, the speculation against the blockchain. Yeah, how does minting work with a vault? It's a bit similar to traditional futures. The process, you create a vault. And then on this vault, you add collateral. And then you can mint or create whatever assets you want. No, there is a limitation of the assets, but you can choose of many of them. And you need more collateral than what you can mint. For example, if you take a 200% safety, then you have to add $1,000 to your vault as a collateral, and then you can get out 50 or less dollars worth of synthetic assets. And all are based on the price or on other exchanges. They call it the Oracle price. And yeah, you can therefore borrow these D tokens, these synthetic assets against collateral and with a fee. And what should be the price on the exchange? If you take a synthetic asset from the vault, you have to add your collateral, then you mint it, and then you sell these D tokens. And if you want to be hedged, you also need the underlying asset on a normal brokerage account. And all of this costs money. Therefore, the price must be higher on the decentralized exchange than it is on a normal exchange like Nasdaq or New York Stock Exchange. And that also happened. The premium was around 20 to 40%. But the people behind DeFi didn't like it. Because why should you invest in stocks for a higher price if you just go to a normal brokerage and there you can get the stocks and other assets on the normal exchange price? And they had some solutions. For the dUSD, with just a synthetic US dollar, they allowed that the DFI could be transformed to dUSD on the Oracle price. That means if you have, for example, $10 worth of DFI, you could get 10 US dollars, 10 coins of US dollar. And because on the exchange, on the DeFi exchange, the price of dUSD was more than $1, you can make an instant gain. And you can do that as long as the dUSD goes to $1 or below. Logically, the people behind DFI also want to prevent that the US dollar can go too low. Therefore, they had a solution. And the solution was that you can use the dUSD as collateral from an Oracle price standpoint, even if it's lower. There they also have some tiny margin, but that's off topic, yeah. And for the D tokens, they allowed the creation, the redemption against the dUSD. Also with a margin that it's not 100% backed, but more or less. And for example, if you have dUSD and want to transform it to dApple, then you can do that, and you just destroy the dUSD, and therefore you get the dApples. And on the chart below, you can see now the premium is a bit above 0, couple of percents. Yeah, and for the dark blue line, that's the dUSD, he must be below 0. Here we have the example of the apple, but it's more or less the same for all these D tokens. The darker pink, this is the number of tokens who have a collateral. They are minted with the vault. And the lighter pink, that's against the blockchain itself. And as you can see, at the point they switched, the dark pink line still got up, but the collateralized stocks went down, way down. And I think they will go further down because it's too expensive to mint them. Yeah, the problem, more and more tokens are uncollateralized. They are bets against the blockchain itself. And assets are expected to outperform the USD. That's logical. An Apple stock will better perform than the USD normally. And therefore, you can just buy these dApples against the blockchain, and then you can get back the dUSD. And money supply can only grow. That means more and more dUSD are created. Because you switch your dUSD to the asset, and then after a couple of years, you switch it back. And because the performance of dApple is expected to be higher than for the US dollar, and therefore you get more dUSD back than you invested first. That means the money supply will grow. The creation and redemption against the dUSD will result in monetary expansion. Not everyone could leave. Now more and more people go to the DeFi chain, and the people who are already there invest more and more, and what they generate, they still leave on the blockchain, and then it's no problem. You can switch your DFI to dUSD. That works, and it's no risk for the blockchain. But at the point where more people want to go, then the blockchain could be at risk. Because then the dUSD will go lower and lower and lower. Yeah, you can then mint the D tokens, but only on a certain amount, because if the trust goes away, no one wants this D tokens anymore, no one wants this dUSD anymore, and the whole thing will collapse. It will go to zero. And it must go to zero, because this monetary expansion is doomed. And when that will happen, also the DFI will crash, because what is the purpose of a blockchain without purpose? Yeah. And yeah, I hope I'm wrong, but most of the time I'm not. Thank you for your attention.